Today is a super exciting day. Today is March 22nd, and there is a FOMC meeting. They're going to be talking about the rates, and it's especially interesting because of the events from the last 10 days. The events, we can call it a bailout, a bank bailout, banking crisis, liquidity crisis, turmoil, chaos, whatever you want to call it. There was a storm over the last week or so with the banks due to not having enough money. So today we're going to go over some of our charts, my charts that I've been reviewing and that are important to me, and I might dabble in a little bit of what I've done. Let's jump right in and take a look at some charts today. All right, so this one here is of the Dow Jones, and what I'm really just looking at is a very slow moving MACD indicator. You can see that I've used over here 48, 104, and 36 as my inputs. So it's really slow moving. Made it myself. It's customized, although not commonly used. But what I want to take your attention to is the fact that right now our very slow MACD histogram is starting to turn up. And going back on this really slow indicator, it can give me some confidence that we might be near a bottoming time. Now, I typically always have my bull hat on because there's always money to be made somewhere in the different parts of this market. Small caps, large caps, discretionary staples, you name it. There are many different segments in the market where you can make some money. So here you can see that basically on March 15th, right around when all that noise around the banking issues was going on, the Dow has sort of bottomed. And I'm going to continue to watch it. It's at a level here between 330 and about 320, and it's an area of a lot of resistance, I think. And so I'm going to continue to watch that one. Next chart. Okay, this again is for the Dow, but what I want to take your attention to is something that I am learning or been practicing a lot for the past 2 years, has been the higher lows in the MACD histogram corresponding by lower lows in price. So we can see here MACD histogram in December made a low. Prices made a low. That's great. Then we see price continue to make a lower low at this level here. However, a MACD histogram registered a slightly higher high here, a higher low here. So this we call a bullish divergence. I've been covering this a lot, and again, I just want to point it to your attention so that maybe you can incorporate it in your trading too, or your investing, whatever you want to call it. And I've also drawn some trend lines of areas of support. So the most recent one is here, and I think it's important to watch along with this bottoming process. There's also another trend line that we drew, but it was violated in February. So now we want to continue to see price consolidate and grind higher up. Okay, this is our December low prognostic tool. So if the December low is broken, we really want to pay attention because it can indicate with a certain degree of certainty that the next few months could be very volatile, and given all the events over the last week or so, I think it's important. Okay, this is another chart that we've been looking at. This is a very long-term look at the Dow Jones. We use the 20-month moving average, and what we see is prices are below the 20-month moving average, and that is not conducive to a bull market. Now, I know I just looked at the weekly chart and indicated it could be bullish, but remember, you want to look at your charts in multiple time frames. Dailies, weeklies, and monthlies is what I use. Before I go into more charts, what I'm seeing is quite a bit of mixed signals. There is strength in the technology sector. There's strength in the S&P, weakness in the Dow. The New York Stock Exchange, or the aggregate of stocks there, is showing us some weakness, which we'll go into. So it's kind of a mixed bag. I think it's really important that if you are in the market and there's all this volatility with respect to the news, and sort of investors being and traders being quite sensitive to the news, is to have your stop losses. One of these days I'm going to probably make a PSA on stop losses, because it has really just elevated my portfolio gains. Meaning, actually, in other words, I'm not taking big losses anymore. In the past, where I did not use stop losses, my portfolio was getting decimated, and it takes a very long time to get back up. Okay, next chart. Okay, this is for the QQQ, the NASDAQ 100. This is the ETF that I am trading. I've been in and out of. I'm in it right now. And our purchase price average is right around 296 here. And again, it was due to this divergence. And you can see, again, you have a low here, a higher low over here, but price made a bigger low, a lower low. And that is typically a bullish divergence. And what do you see? MACD histogram goes positive. That means prices were appreciating, and there you are. So right now I'm sitting pretty good, in a pretty good position with the NASDAQ because of that. You can call it a broken bear, the upside down McDonald's sign, whatever you want to call it, a W for wins. But keep an eye out for that, because that pattern occurs a lot. And if you can enter in the market or into a particular security with that type of setup, you can be pretty confident it might work out for you. But again, place your stops. All right. Okay, this one is for momentum, the ADX. So we see the ADX is starting to tick up. From basically a low of 15 to about 16 right now. And the ADX green, which is for prices moving up, is accelerating. And it made a slightly higher low than back in January. So we want to see this continue, and ADX will respond accordingly. However, that being said, with respect to the mixed bag, we have a lot of resistance at this 13,000 level. So the NASDAQ needs to go above 13,000 and hold there for there, I think, to be more traders, more investors to coming into the market. There's another chart that I'm going to show you in here where we see a huge outperformance just in the last week or so in large cap stocks. And it made me think whether there is more institutional, larger pools of money coming into the market, because typically that goes to more well-established companies, which the S&P 500 has, whereas the Russell 2000 small caps is a little bit more riskier and may not attract as much institutional dollars. Okay, so we covered that one. We've got some resistance. Okay, here's a weekly chart, one of my favorite ones, because it clearly demonstrates how to be patient and look for setups. Because here is the broken bear, such a beautiful broken bear. You have a washout here, right? And then you have a surge back in the summer of 2022, late summer. And then prices made a lower low, but the MACD did not. And that was extremely bullish, and that's really in October and December got my attention pretty much to get into the market, and we have. You know, although a lot of what I'm showing you, my trades are really good, and they've been very successful, I will admit that the hardest thing that I am having with my trading is where to place your stop, because so many times I'm getting stopped out. But most recent stop out was Google. We picked it up around $94 because of some bullish signs, and my stop loss, I moved it up too high, and then the price is traded down, and now they're at $105. So that hurts. It actually really hurts. But those wild names, you got to keep on a leash. All right, what do we have here next? Okay, so the weekly is looking good from a MACD perspective. There is momentum on a weekly basis. Okay, now that being said, like I said, we want to look at things on a multiple time frames. Here is a monthly look at the NASDAQ 100, and we've got the 40-month moving average on here because it kind of follows the NASDAQ quite nicely. You can see it's following it quite nicely. Prices touch and move up, but we'll see here that we're just above it. So we want to continue to watch the $13,000 level here. All right, here is my most messy chart, and this is of the S&P 500. It very similar to the Dow in terms of the trend. The wall of worry, I think, is between 3,900 and 4,300 in the S&P. So we want to continue to watch price action here. I think it's probably just going to gyrate in and around here because there's still a lot of doubt. Talks of recession, things like that. Okay, next one we're going to take a look at is the VIX. Like we've been saying, VIX below 20 is bullish for stocks. And now we do see the VIX coming down from its high in 26 and March 15th down to 21. And the S&P 500 is rallying upwards. US dollar is also a big factor, I think, in the performance of the market. You can see here, dollar falling, prices rising. Now, is the dollar going to fall? I think it really depends on what the Fed is going to say. I think my 2 cents on the Federal Reserve is, look, I don't think they're done reacting to the banking crisis. I think they might be pretty conducive to markets. Bank of Canada did not raise most recently. I think the US will likely follow given the banking crisis because of the lag effects. I think they're really going to chat up the lag effects of policy because we're only just starting to see some of the cracks. Here's that surge in the S&P 500 relative to small caps. Discretionaries are starting to make a stand against staples. That is key. We want to continue to watch whether risk is coming onto the market. And here is our advance and decline ratio of the New York NYSE. We're holding at this level. It is below its moving average, and then some other metrics is not looking too good. We're coming from a low point. So what we want to see is more strength in the market. If it doesn't come in, I think that we have some downside risk. You can see again here, a cumulative new highs minus new lows. We hit another negative point, but it's not that bad. So we might just get out of this. Here's another one, the cumulative new highs and lows. We are above our moving average and pretty close to the zero line. And the S&P 500 is above its 200-week moving average. And here is volume, advancing and declining volume in the New York Stock Exchange. That does not look good. Volume has dried up. Again, here's another one that was really interesting to me. The S&P 500 number of stocks below the 50-day moving average has hit another low of about 25. Okay, so that pretty much wraps up this trading journal. Hopefully you found it informative. You can incorporate some of these charts. Not that I'm some billionaire investor trader, but I am finding more and more success with my chart list. So follow along, hit subscribe, hit the like for more trading journals so you can elevate your trading game. So we will do another trading journal later this week to recap what happened with the Federal Reserve. All right, guys, happy trading. See you next time.